Hello there. Welcome to Principles of Accounts, Zimsec O level. We are back again on our channel. Now we want to look at a question from June 2012. This is a question on the preparation of the rent received account and the stationery account. So in this question, we are going to apply double entry, and we have to apply this double entry so that we are able to prepare these two accounts, that is the rent received account and the stationery account. So I'll go through the question and then we answer the question. The question reads on 1 January 2012, Estawana and the following balances in a nominal ledger. That is rent received $5,000, a credit balance. So we're going to the credit balance of the rent received, and then we start with the balance BD on the credit side of 5,000. Then we go our stationery also. We are going to start with a debit balance of 12,000. Remember, DR set for debit, CR credit. So we have got 12,000 on the debit side of stationery. And then the question proceeds and say Estawana subleased part of her premises at an annual rental of 30,000 during the year. The following transaction took place. So what it means now is this rent of 30,000 is the rent that is supposed to be received per annum, 30,000. And we know that when we prepare our financial statements in terms of the income statement, we prepare according to the matching concept. So regardless of receiving the money or not, we have to charge 30,000, to include 30,000 under any other income of rent received. Remember, this is rent that is being received. This is rent received, so we are receiving 30,000. And then we see now on the rent that was received in form of cash or bank, and then compare with this 30,000 to see if there was a prepayment or there was a accrual. Was the rent paid above the 10,000 or was it paid below? When it was paid below, it means we are going to have an accrual that we are going to carry to the next financial period. And then if it was paid above 10,000, like for example 35,000, we are having an extra 35,000 that is there. It becomes a prepayment. So know how to adjust it. So it becomes a prepayment of an income, right? We go to the next information is saying on 2020, then we got March 31, received cash of 12,500 for rent. And then we have other transactions that are there. And then let's quickly move on to what is required in terms of this question. And then we can maybe move on to this statement that on 31 December 2010, the stock of unused stationery was valued at 4,000. Estawana's financial year ends on 31 December. So this is where the financial year is ending. So basically, if it's ending on 31 December, it means it's starting on 1 January, 31 December. Then on the required part, the question requires us to prepare the rent received account, and then we prepare also the stationery account. So what we are going to do, we are going to start with the stationery account. So sorry, I will start with the rent received. This is the first one. Let's check the balance that we have for rent received. Rent received, we are seeing that we are having a credit balance of 5,000. So we are going to the credit side and we're going to write balance BD there, and we are able to put our 5,000. So as we go now to the credit side of our rent, this is our rent received account, and we go to the credit side. We are going to start with the balance BD, and our balance BD that we have is $5,000. $5,000, and then we move on to check other transactions that are there in the question that we need to that are affecting rent received. Then we go to Estawana subleased part of her premises at an annual rent of 30,000 during the following transaction took place. So this is the annual rent that is supposed to be entered in the income statement or the profit and loss, right? So the double entry that we are supposed to apply to this 30,000 is that remember, this is rental income, so it's part of income. And remember, when we are in the income statement, let's take note that on the debit side we have expenses. On the debit side we have expenses, and on the credit we have income. So this is rent received, so it's income. So it's going to be on the credit of the income statement. So the double entry basically now entails that we should credit this income statement since it's an income, and then we we credit the income statement, then we are going to transfer the amount from the rent received account. So that's what we have in terms of this transaction. So we should record that 30,000 in terms of what was supposed to be received. So what it means, our double entry that of 30,000, we are going to debit the rent receipts. We are going to debit the rent receipts, and then we are going to credit our income statement. So that's what we have in terms of this treatment of this 30,000. So the part that we are concerned with is rent received account that is being asked in the question. So we go to the debit side of the rent received, and the amount is 30,000. So we come here, we write here income statement. Income statement and is 30,000. This is what is supposed to be received for that period, 30,000. Then any payments that are going to be made are now going to come to the credit side. So or any money that is going to be received will come to the credit side. So what we have there is that on March 31, received cash of 4,500 rent. So the double entry on 31, on March 31 is that we are receiving cash. So obviously cash is we debit cash. Cash is being debited by the amount which is 12,500. And obviously what we are crediting now, we are crediting rent receipt. And the same amount is 12,500. So that's the double entry that we have on March 31. Remember, when we receive cash, we debit cash, and then we credit rent receipt. So the part that we are concerned with is this part of rent receipt. So we go to the credit side of the rent receipt and enter that one, 12,500. So here we've got cash, 12,500. Then we go back again to check the next transaction. The next transaction is saying bought stationery by check. This one is affecting stationery recorded in the stationery account. Then we go purchase a stationery again. This is stationery. Return the damaged stationery also. This is affecting stationery. We go to the next one on June 30. We've got received a check of 6,000 for rent. So double entry again for this one. We are saying we are receiving check. So check is bank. So we debit bank. And then we credit rent receipt. So we are concerned with the rent receipt. So we are going to the credit side of the rent receipt, and we are going to enter the amount of 6,000. So we have 6,000 there. We go to the credit side of the rent receipt, and remember this is this man was received bank, and the amount is what is 6,000. Then we go back again to check what we have there. After that, now we have got another receipt of cash of 9,000 rent in cash. It's another cash. So we are employing that one that is on top there, that we debit, we debit cash, and then we are going to credit rent receipt. So this one, we go again to the credit side and we credit with 9,000 cash. Then we are there again. We have cash 9,000. We check again if we've got anything again that is going to affect this. We are seeing that that's the last part, but we've got some information that is below again. I saying on 31 December 2010, the stock of a new stationery was this is affecting the stationery again. So we have come to the end, so we can go and balance our account now. Right, we can go here and balance. So obviously now what we are going to do, we are going to put our double lines. We are going to put our double lines, and then we add the total of the credit, and then total, and then on the debit side we have 30,000. So you'd see that the credit side there is going to be greater, because the total of the credit side is 32,500. If you add 5,000, you add plus 12,500 plus 6,000 plus 9,000, you're going to get 32,500. So you're going to put 32 2,500 there. Then obviously we are going to have our balance CD here. We are going to have our balance CD here, which is 30,000 minus 30,000. We are going to get 2,500. And obviously our BD will come on the opposite side below the double lines. Here now we have got our balance BD, and the amount is 2,500. So that's what we have in terms of the rent received account. Then we go back again to check the next question. You'd see that in the next question, the question is asking us here. We are now there on the stationery account. So we are going to open a stationery account. But before we go there to stationery account, we've got balance that we are given at the beginning of the period, and we are being highlighted that the balance that we have for stationery at the beginning is a debit balance of 12,000. So we are going to the debit side of the stationery account, and that's where we're going to have our BT at the beginning. So we go down there to see our stationery account. So remember, we've got a balance BD on the debit side. This is our stationery account. So our balance BD. This is our balance BD, and remember, the amount is 12,000. Then we can go back again from the beginning of the question to see any transaction that is affecting the stationery. We are seeing that on April 2, bought stationery by check of $35,000. Bought stationery by check of $35,000. So we need to put down the double entry first there. So if you check, stationery is the one that we are receiving, and we are paying using check. So bank is going to be affected here, and money is going out of the business. So this the bank is going to be credited, and we are receiving stationery, and so we are going to debit stationery. Basing on the basic principle that we debit the receiver and then we credit the giver. So stationery is the receiver here, we are receiving stationery, and the check in the form of money is the giver, since money is going out of the business, so we credit. So here we debit stationery. That's the double entry on April 2, and then we credit bank. But we know, according to our question, we are concerned with the part of stationery. So we're going to debit stationery with 35,000. So we go to the debit side of the stationery account, and then here we are saying now it's a bank. Remember, it's a bank, and the amount is 35,000. So that's what we have in terms of that transaction. We go back to check what we have next, right? So you would see that our next transaction is on June 5. We purchased the inventory with 20,000 on credit from Takunda Books. So this one is a purchase that is taking place, but this purchase is on credit. No money is being received. So what it means, we have no bank, we have no cash. So you have to open the name of the person or business that we are purchasing from. We are purchasing from Takunda Books. So basically we have Takunda Books and stationery. So we are receiving stationery. So we debit stationery, and then we credit. Since we are not receiving any money, we are going to credit the name of the person, Takunda Books. So we are concerned to remember, we are concerned with this part of debit. So we are going to debit the stationery with 20,000. So we go again to the debit side of stationery accounts, and then we are going to say Takunda Books. And the amount that we have there is 20,000. So 20,000 here. And then we go back again. Then we've got the retained damaged stationery worth 8,000 to Takunda Books. So what does it mean? When we bought the stationery, we debited stationery account. So we are now retaining the stationery. It means we are removing the stationery from our books. It means we go to the opposite side to remove it. We enter the 8,000, so we are going to credit stationery. We are going to credit stationery. We credit stationery, then we debit Takunda Books. Remember, at first when we bought from Takunda Books, we created Takunda Books, and now we are doing the opposite, we are debiting. So what we have now, we are saying for transaction on this one, June 8th, we are saying we debit Takunda books, and then we credit stationery. So that's what we have. So basically, we know that we are concerned with as the stationery. So this is the entry that we want. We are crediting stationery. The amount is 8,000. So we go there again. We go to the credit side, and we are going to say, yeah, these are returns outwards. Remember, these are returns outwards. So the outwards part is just explaining the direction of movement of the goods. Returns outwards. When we bought them, they were coming in the business. Now we are telling them they're going out, so it's now returns outwards. So we have got 8,000 amount. Then we go back again to check what we have after that. We've got the returns outwards. This one. Then now we are on received a check. This is rent, and then we've got rent again. So we can go to the last item there. The last statement that we have there is affecting. That one is affecting. It's affecting stationery. Let's try to see. Right. If you check that statement, that statement is saying on 31 December 2010, the stock of a new stationery was valued at 4,000. The stock was valued at 4,000. So what it means, we have got stock of a new stationery which was valued at 4,000. So what it means is this is at the end of the financial year. So this is stationery that was not used at the end of the period. So this is going to be our balance CD. Remember, stationery is a normal debit balance, so it means our BD is going to be on the debit side, below the double lines. Then our CD will be on the credit side. So this is our balance CD that is going to come to the credit side, and then the BD will come on the debit side. So we go again to our stationery account. We go again to our stationery account, and we go to the credit, and we are going to say this is our balance BD. So we are going to remember before we put our balance CD, we have got the amount of stationery that was used during the period. The stationery that was used during the period represents the expense, and the double entry for that, for the stationery used during the period. Let's just come here and maybe try to summarize the double entry that we have. For stationery used during the period, we are going to debit. Remember, this is an expense. We are going to debit the profit and loss or income statement. We are going to debit the income statement. This is stationery used. Stationery used or stationery consumed. This is an expense. We debit income statement because all expenses are on the debit side of the income statement. And then we credit the stationery account. So what does it mean? It means we've got an amount that should be here, that should be transferred to the income statement. So we have got income statement that is there, and this figure, we don't have it. We can find there's a balancing figure since we are given all the figures there. So we find this figure here. So so what we are going to do, our balance CD now will come here. And we are told that the new stationery at the end of the period is 4,000. So we have our 4,000 here. This is what we have at the end of the period. So what is going to happen now is we can now put our double lines. Right, we can now put our double lines. Right, so this is going to be a balancing figure. And what we are going to do, if we add, obviously the debit is going to be greater than the credit. So add the total of the debit there, you get 55,000. 55. Let's try to see. Here when we add 12 plus 35. Let's try to add there. We have 12 plus 35. And then we also have 20. We are going to get 67. 67. So 67 will come here, 67,000. And then obviously it will come again here in between the double lines. Then this amount now we are saying 67,000 minus 4,000 minus 8,000. So we can calculate that one again, 67 minus 4, then minus 8,000 again. Then we get 55,000. So the figure that should go to the income statement is 55,000 here. So very important there. And then our BD also, we should not omit the balance BD there. Remember, our CD is on the credit side. So let's not omit the BD. The BD will come on the opposite side here. So it means we are going to have our balance BD here. And the balance BD is the CD that we have on the credit, 4,000. So that is what we have in terms of in terms of the second part, which is the stationery account. And then now we can go and see what we have next in the question. Right. You see the last part of the question is saying state where exactly in the balance sheet in bracket statement of financial position of S Tawana would the balance in the following accounts on 31 December be found. So we see that in the rent received that we prepared, we have got a credit balance of 2,500. Here we found a credit of 2,500. That's where we have our BD. Our BD is on the credit side. So when you say balance, we look at where we've got our BD. So if you go back there and go to the recent received account, you'll see that our balance BD on the rent received account is on the credit side. You see, we are now in the rent received account, and our balance BD is here, and it's on the credit side. So that's where we have our balance BD. Then we can also check in terms of the stationery. Our stationery, we see that our balance BD is on the debit side. So that's what we have there. So let's go there and try to see what we can interpret in terms of those balances. If you have got the rent received, remember rent received is an income account. It's an income account, and when we have a balance BD on the credit, it represents a prepayment. So this is a prepayment of rent received. This represents a prepayment of the rent received, and obviously a prepayment of income will show it as a current liability. So this is basically a prepayment. This is a prepayment. It's a prepayment, and we should show it as a prepayment of income is a liability. So we show it under current liabilities. But a prepayment of an expense now is a current asset. Then here we've got stationery. And stationery, we found that stationery is on the debit side. We've got a debit balance for stationery we have a debit balance of 4,000. Remember, our BD is on the debit side there. Debit balance of 4,000. And this one represents unused stationery, which is here. So this is our closing stock for stationery, and we know that closing stock falls under current assets. So this one is a current assets. So here we've got current asset for stationery. Well, the question is saying state where exactly in the balance sheet. So stationery, we are going to include it under current assets. And then the rent received, we have a credit balance. You said it's a prepayment. When it's a prepayment of an income, it's a current liability. So here we've got current liability. So on the first part of rent received, we should take note that for income, if it's a prepayment, it becomes a current liability. If it's an accrual or an owing figure at the end of the period, this one represents a current asset. So the opposite is true now when we are looking at expenses. When we are looking at expenses, when it's a prepayment, we represent it as a current asset. When it's a accrual or an owing, we are going to represent it as a current liability. So that's what we have on this question. So this question was from June 12th. I hope this is beneficial for you for your exams. Stay tuned for more videos to come. We are still coming. We know paper 2 is around the corner, but we are still trying. I'm still trying my best so that I can give you what is going to help you in the paper 2. All right. Stay tuned for more videos. Those who haven't subscribed, please subscribe and share. With that, we'll meet again in the next video. And I'm signing out. Very well.